So we are nearly at the end of our first day here at Startup Fair, and only three speakers remaining. And we'll continue with Hasan Surtiwala. So he's a venture consultant at 110 with an entrepreneurial background, having founded and co-founded several tech companies, as well as a trader in the financial and crypto markets. Please give Hasan a warm welcome.
What's your traction? What's your go-to-market strategy? How many users do you have? These questions are probably the most common questions most of us, if not all of us, have heard. Or at the very least, we've highlighted into our pitch decks, and they're following a superficial framework, hoping that these KPIs and the fact that we can just send it over to an investor through LinkedIn will land us the golden opportunity and give us that investment, which would then propel our business and make all of our dreams come true. But what if I told you that this is not the right way? What if I told you that investors rarely look into their LinkedIn inboxes and actually go through your pitch decks? I'm Hasan Surtiwala. I've been fundraising for startups for a few years, actually for half a decade, executing on fundraising processes and investment strategies. I've been on both sides of the table as an entrepreneur and an investor, and I often got the question, what is it that investors are looking for? What is it that makes them tick? But more importantly, how to get them to say yes. To be honest, I don't actually know any of them. I'm going to have to disappoint you. I don't know any of those answers to those questions. But I do know that if you just challenge the norm and do something differently in your fundraising process, you might get closer to getting a yes. So this is a very simple decision-making process for an investor. You have two sides. It starts with you. Are you an awesome founder? Yes. Did you sell your vision? Did you really perpetuate your passion? Yes. Then you fall over to the left side. Left side, right? Yeah, left side of the chart. And then now you're in power with the investor. Both of you are working together towards getting a solution and realizing a mission. And even if you're not in an attractive market, you're still a top founder, and you can convince the investor that you're in the business to invest in business that creates new markets. Then they'll be open-minded. If you fail to sell your vision, if you fail to sell your big idea and you're just like any other competitor, they're going to have to treat you like a penny stock. It's going to be all about KPIs. It's going to be all about numbers. It's going to be 6 months of waste of time. Are you going to reach any of the KPIs? Are you going to reach any of the extraordinary numbers? If yes, well, then give us a call, and then we might invest in you. But you're going to have to be competing with a lot of other competitors. You're not going to have a close relationship with your investor. But suppose if you green check all the boxes on the left side, investors might say no for the most obscure reasons anyways. It could be that they're just not in the flavor of the day that you're presenting, meaning it's not the latest technology, blockchain, deep tech, artificial intelligence, whatever is the new hottest trend that they want to look at after. It could be that they're just having a bad day, or they just don't want to invest in you. It could be for any obscure reasons. In fact, there's this one venture capital firm in US, one of the oldest one, called Bessemer Venture Partners. They have a list of all the big unicorns of the world today, Intel, Airbnb, and Apple, which they listed and given oath to that they've said no to them for the most obscure reasons. And one of them is eBay, and the investors said no because of this. Stamps, coins, comic books, no-brainer, pass. I don't know if the entrepreneur at that very first meeting with the particular investor failed to present his vision, but this is how far as he got, and I'm pretty sure that the investor is regretting it. I've been helping a lot of startups, fundraising. I've been doing fundraising for myself as well. Sometimes I also ask the generic questions. I go through the due diligence process. Sometimes I go with my gut feeling. But when I'm in a room full of investors, I actually feel like this. Somebody standing there with a big vision, and investors just asking a bunch of generic questions. I've actually had an investor who said that your product is not disruptive enough without having to explain what that actually means. Now, I'm going to share with you the early stage startups in here, what's helped me get closer to a yes, and in some cases actually getting a yes from the investor. And it's not what you think. It's not having a really nice pitch deck and a teaser and having all the KPIs in check and having a really nice website and being in the business of flavor of the day, so to speak, like having the hottest technology, is something completely different. First of all, you have to connect with the investors and not just via LinkedIn. You have to really grab their arm and not poke on their shoulders. And sending pitch decks through a LinkedIn inbox does not work. I cannot begin to express how it feels like when a pitch deck comes into my inbox, how scamming like it feels. Nobody really takes it seriously. Like it has to be sort of a serendipitous event where an investor and an entrepreneur meet up and they talk about big ideas, big vision, they connect in a more humane way. Now, even though if you have to really connect with one investor, keep your options open. Just don't rely on one single investor. You have to make sure that you are not sort of giving all your options. I mean, you're handing all your cards to one investor. You have to be sure that other investors might be interested in you as well, because if one investor says no, you have something to fall back on. But just make sure that you choose the right investor. Be a custodian of wealth. Don't blow it on champagne and fancy offices. And what do I mean by that? You have to give the sense to the investor that you're going to spend the money wisely. You're not going to squander it on making that exponential growth curve or being a really fast growth company. You're going to really demonstrate that if I do 1, 2, and 3, X, Y, and Z result is going to happen. And for God's sake, like I don't know if there's any early stage startups in here, do not, by any means, do not make those pie charts with 3 slices, which is like, excuse me, which just shows percentage-wise how your money is going to be spent on R&D, marketing, and sales. Be really precise on how you're going to spend the money, because in the end, essentially, it is investors' hard-earned money, and it is the limited partners' hard-earned money, which is they're taking a bet on you. So have that respect, and then showcase them to them. So don't just talk about it. Actually show it in a plan. Next, treat investors like you would treat your customers. Segment your investors. Are they investing in your region? Are they into your particular industry? What about the price that you're offering them? Is it a fair valuation? Is that the price that you would pay for a startup if you were to invest in it? Treat them like you would treat your own customer. Be like a job candidate. Don't apply like anyone else. And what do I mean by that? We've all heard about the job candidates who lands really cool jobs. They're usually referred by someone, or they met somebody at an event, or a current employee referred them to the boss, and then they get the job. And the same in the VC industry, at least what I've experienced. It's the existing founders who refers some other friend of them who's building a really cool project, or you get referred to them through an event. It's not just handing in an application, or in the case of startups, handing in a pitch deck and then you're selected. Prove your market as much as you can. Like when you have an idea, make sure that you've stretched it as far as you can. Bootstrap before the strap actually snaps. Because if you're just standing there with an idea, investors are not really going to have anything to touch and feel. They have to get the sense that if they put their money in you, and if you made it this far without any money, imagine what will happen if they give you some money. So prove your market, get some clients, get some pilot partners, anything that could just prove that there is actually interest for your idea. Now, make it about you. It's referring back to that chart that I was talking about in the beginning. How are you going to change the world? What's your big idea? What's your obscure vision? And then be selfish together, meaning find out what ticks the investor. Is there something that's bothering him? Has he not performed? If it's an investment manager, he hasn't been performing well for the past, 12 months. Figure that out if that's the case, and then offer that opportunity to them. Unless you're solving some major disease, you're going to be selfish. Like it's about you and your business, and the same with the investment manager in the VC fund. It's about them and how they can get the next unicorn. Make sure that you find that mutual interest and then work on that together. And then business model. That is, I would say, single-handedly the most important KPI in any pitch deck or any business, because this is really going to demonstrate that your vision is not just, pink clouds. It's actually something that can happen. It's something that could be executed. And when it comes to business model, don't just highlight that you're going to make money on license fees or you're going to have subscription. Really be able to demonstrate, is it repeatable? Meaning, is it a one-time offer or are you going to get a recurring income? Is it defensible? Meaning, is it easy to be copied or are you able to protect your business model within the particular business and software you have? Is it expandable? Can you expand it into other revenue streams? And then finally, when it comes to fundraising, challenge the norm. Don't just spray and pray and send it out to any other investor that you meet and then hope that they will be able to see the connection between what you're offering and what they're all about and then eventually invest in you. You are entrepreneurs after all, I assume. So challenge the norm and do something different. Get out of your comfort zone. Because if you can just all do that, maybe, just maybe, those questions which I mentioned in the beginning will stop and we won't have to live to see days like this anymore. I don't know if you remember Elon Musk a few weeks ago said this to his investors. And I think if you can just challenge the norm and do things a bit differently and really connect with the investors in a more humane way, I think investors will start asking more interesting questions like, how are you going to change the world? What are you aiming to achieve? What are you building? How can we help you get there? And you just might get closer to getting that yes. Thank you. Oh, questions? No? That's it? All right, thank you.